Good evening, this is Mortgage News Nightly. Here from Orange County, California, I have Senior Loan Officer at Stearns Lending, Laura Lee Brown. Laura Lee, how are you this evening?
I'm great. It's great to be here, and I'm looking forward to see what this new year brings.
So there are a number of new regulations and strict guidelines in today's market. Can you shed some light on these for us?
Actually, I sure can. There are very few people these days who fit perfectly into the traditional guideline mortgages. Guidelines and requirements are changing every day, and this has become the norm in the industry. The amount of debt compared to a borrower's monthly income, which is also known as the debt-to-income ratio, is being scrutinized now more than ever before, especially with the new qualified mortgage rules that have just recently come out.
So my rate on my first mortgage is lower than current rates today. However, I have some equity in my property I'd like to tap into. What are my options?
Well, actually, second mortgages and equity lines are a great way to tap into the equity in your property. For those of you who currently have a very low rate, lower than where current rates are at today, what you can do is you can get a second mortgage or an equity line and draw from this and get cash in your pocket without having to touch your first mortgage.
Many people don't fit into traditional guidelines that big banks require. Are you able to help these people when other institutions cannot?
Absolutely. As a matter of fact, I provide outside-the-box financing for a majority of my clients. What we have done is we have set up strategic alliances with several different credit unions, which allows us the opportunity to close loans that other lenders may not be able to. Some credit unions use their own money, and they also handle their own servicing. This means that they have more flexible and different rules in the qualification process. This allows us to qualify a broader base of people. Therefore, we have partnered with several different credit unions in California who we are proud to say we work with.
Can you give us some examples of some recent loans you have closed?
Yes, as a matter of fact, I just closed a loan at the end of the year. It was a jumbo loan. The borrowers were very distraught, as was the realtor. They had been actually qualified with two other lenders. And then at the 11th hour, these two other lenders told them that in order to purchase the new home, they would actually have to sell their current home, which they were not planning on doing. So the realtor brought the loan to me. She needed me to close that loan in 2 weeks from start to finish during the holidays. So needless to say, I got it done. I got a little creative with my financing. I split the loan into two loans. I put the first through Stearns Lending and the second through one of my credit unions. I was able to close the loan on time by the end of the year, and the borrowers were not required to sell their current home.
So do these tough loans mean higher rates?
No, actually, the rates are very competitive for these outside-the-box loans. But I also want to mention that I handle all types of loans. I handle your traditional FHA, VA, conforming, high balance, jumbo loans, even reverse mortgages. I'm your go-to gal for all types of loans. Stearns has the competitive rates for the easiest of borrowers, so do not forget about me, Laura Lee Brown.
I'd like to thank all of our viewers for watching tonight. This is Mortgage News Nightly. I'm Brett Barrett, and stay classy, California.